My investments in 2019. You ready? This is inside information. Don't share with anybody. I'm going to show you my investments for 2019. And I'm telling you, man, it's the exact same it was for 2018, which is the exact same it was for 2017 as well. But I think this will be a fun video. I saw my man Graham Steppen, whatever his name is, this guy. Graham, and I like his stuff. Actually, he's a good dude. I don't know him; he doesn't know me, but he did a video, investing for beginners, my millionaire investment strategy for 2019. Mine's gonna be my what's the word I should look for? My low class strategy for 2019. You ready? Because I'm certainly not a millionaire, but I parked some money away, and it's all good. So let's dive right into this, my friends. And I just thought it'd be fun to give you my thought. It was fun. All right. Excuse me. If you like what you see, subscribe. You see a little subscribe thing? Can't really see it. Oh, there you go. Oh yeah. Subscribe. All right, let's dive right into this. So I'm going to show you. You ready? Here it is. There's my portfolio. Woo! Look at that. 4 accounts. And actually, this isn't it's only got $64 in there, so don't even make much mind to my FDIC insured account. I think I got 75% in the Vanguard Target Retirement 2050-50 fund, and I got the 12.5% or something like that between these two Cambria ETFs. Cambria is run by my man Med Faber. I'm a big fan of it. Look, is it for you? I don't know, and I don't care. But I like Meb. I like the research he does. I like his podcast, and I'm convinced that there's some opportunity there for momentum stuff, and so that's why I have some momentum. Now, as you can see on Friday, because the markets were closed yesterday, the Vanguard fund did very well. It was up 1%, where the two Cambria funds were down. So there you go. There's your momentum play and your maybe reverse psychology, so to speak. All right, so I haven't looked at the Vanguard Target Fund in a long time. I don't even know what the holdings are anymore. So let's double check, because if it has any bonds in there, we got to get out of this for sure. The holdings they do have some bonds in there. Yikes, I don't want to see any bonds. But I've literally bought this. I think I bought it in, I can't remember, 2055. And when it rolled out in 2010 was the most aggressive of the target funds. So my presumption is probably not the most aggressive anymore. So probably need to go up to the most aggressive one here. Let's see what they got holdings. 54% in total stock. And that's all right, 10% bonds. So they got 54% in total stock, 36% in total international stock, and then about 10% in bonds. So I'm fine with that. I'll keep that. That doesn't bother me in the least. Let's see here. Let's see performance. And I literally haven't looked at this in, I don't know, a long time, at least a few months. Really, all I do is I got a running tally on my app here, and I just look, hey, what's my account balance? And I'll look at that probably once a week, if even that, just to get a gauge of my total account balance. I have no clue what these funds have done. I just don't. I mean, I trust Meb. I like his research, and I trust Vanguard, so I'm pretty comfortable with that. All right, so here we go. We got a 4-star rating from Morningstar. It's only been around for 8 years because, again, what Vanguard does, they'll roll out more aggressive target funds as they get older. And at some point, when I switch this out, maybe I'm very comfortable with the way it is shaking out now. 5 up years, 3 down years. I'm cool with that. So far this year is up 7.5, and that's before. I imagine that's as of the end of January. I can't remember that's as of yesterday, close of business on Friday. Again, just don't really care. And there's a track record. You got some up years, got some down years. Whoop-de-doo. All good. All right. Let's see here. A load ranking by category. Let's move this over. So for 5 years is in the top 20%, which I would expect. For the 3 years, it's not. I don't care for 3 years. I care for 5 and 10. And even that, I don't even care that much. But it'll probably be in the top 20 percentile. And the simple reason for that is I'll show you. Ready? Here's the reason it'll be in the top 20 percentile. Almost you hang your hat on that, or set your watch by it, because this right here, expense ratio, nothing. It doesn't cost anything. Literally, there's no fee. I mean, the total funds in there are probably 3 basis points each, but because it has no fee, I'm pretty comfortable. I will be in the top 20% of my peers, simply because I pay no fee, which is exactly what you want. So I'm very comfortable with this fund. It's all good. Nothing else that jumps out at me that I'd want to talk about, because it is what it is. So let's look at GMOM. All right, so let's move me back over here. It'll be interesting to see GMOM. We'll look up some Cambria website. I haven't looked at GMOM for 2 years now. I think I bought it 2 years ago. Don't recall, but I think there's GMOM, Cambria Global Momentum ETF. Let's see here. Expense ratio is 0.59. It's been around since 2014. So far this year is up 1.76. Actually, I want to look at historical data because it'll be interesting. I literally don't remember exactly the structure of this, but there is something like ride your winners, cut your losers. I'm telling you folks, investing, I am 100% of the Kool-Aid of that. Ride your winners, cut your losers. And I can't tell you how many people say, I bought an XYZ fund at 100 and now it's at 85. I'm just going to let it come back to even. Look, man, don't do that. The market doesn't know. The stock doesn't know. It doesn't know what you bought it at. It doesn't care. It's an inanimate thing. It doesn't know. It doesn't care. So if you wouldn't buy it today, then sell that puppy. I mean, that's all there is to it. If you would not buy it today, then sell it. If you would buy it today, then keep it. If it's in an IRA, maybe, but that would make the option. If you would buy it today, then keep it. If it's outside an IRA and you would buy it today, then sell that puppy and take your capital losses and then come back and get it 30 days from now. We'll have come back to even. So again, you bought it at 100. Is that 85? You like it. You still think it's got a good value there just as you took on the chin. You just bought it by bad luck. All right, so if you sell it today outside of an IRA, you're going to have a $15 loss per share. That's okay. You bank that. Will it go back to 100 in the next 30 days? Not likely. I mean, you're talking, that would be a 15% or $15 divided by 85. That'd be a 17.6% return in 30 days. Is that likely to happen? If not, then sell that puppy and come back and buy it in 30 days again. It might even be lower at that point. It might be higher. I don't know. But at least bank your losses. It doesn't make sense not to do that. And I can't tell you how many people don't. Now, if it's an IRA and you truly like the stock or the position, you're like, yeah, I do like it. I still think it has legs. All right, then keep it. No big deal. But if you wouldn't buy it today, then sell it. It makes no sense to hold something you wouldn't buy today just because you're like, I have this benchmark I got to get back to. That's bad behavior. Bad behavior. Don't do that. All right. So let's take a look at what Cambria has done. Let's see. It was up 19 cents as of right now. So it's up 0.77%, which is good. What was in the end? Let's see. In the S&P is down just a fraction. So I think that's why I bought this fund because I think it is a play of a relative to momentum. I can't remember, to be honest. I have to look into it. But I was fond of Meb's research on momentum stuff. What do I want to look at? Maybe one of these days I'll look at the price per share relative to the S&P 500. What if we could chart this? Because I simply forgot what this was. Let's, in terms of the price. I just know momentum I like. I'm a big fan of momentum. Let's compare this to the S&P 500. Now, again, we only have, 5 years track record, so it's not going to give us much to look at relative to the S&P 500 because basically I'd like to, what we like to see is from 2000 to today because we have so many ups and downs there. So let's see if we can do a compare. There we go. All right, so what are we looking at here? So that's the S&P 500 right there, which is since 2000. What's this time frame? 2015 to September. Oh, what happened? All right, I don't want 2015. I want or to September 2018. I want to look at the whole thing here. So friends, come on, load up for me, baby. Load up. Be interesting to see. Yahoo's. I don't know. It's not my wife. I'm telling you, I've had this issue with other Yahoo places too, not just my Wi-Fi. All right, so let's see what we got. Let's go to Max. There we go. And we're going to compare the total stock index, the S&P 500, and the GMOM, the volatility here. And what's this right here? So that's GMOM right there. All right. Which one's GMOM? So the purple is the S&P 500. GMOM's this guy right here, I guess, right? Let's just get rid of this and see. All right, so we got that. All right, so that's light blue. That's dark blue. Okay, yeah, so here's the total stock index. Interesting. So GMOM has done basically nothing since inception. Since inception. It started at 25 and it's now trading at 24, 23, 21. So it's done nothing since inception, where the total stock index started at 25. Yep. And is up to 72. So that's average. Is that right? 25. I don't know what started. What's the It's not telling me. Let's see. Oh, here we go. So the total stock index started at 53 and it's up to 75. So that's up 35%, and GMOM is down 0.08. I can't remember if that's including dividends. I just don't know. And frankly, I just really don't care. Let's see if there's any volatility here difference. So we had here the VT, what's that? What are we looking at here? GMOM was opened at 26 and it fell down to right there, which is 23. So it is down. Well, actually, let's go up here though. GMOM right here is at 29.42. It dropped as low as 23.90. So 29.42. 29.42 minus 23.9. That's $5.50 divided by 29.42. So it's basically, it had fallen 18% from its high to low as a peak to trough, right? All right, so let's look at this guy though. And this is VTSMX, and that was up to, what that right there, 64.64, and it fell to, that's right. What's going on there? Is that right? 64.64. 64.64, and it fell to, it's not telling me. I can't tell what it is. Maybe I can click on it. Why is it not telling me that? 64.64, and it fell to, that says 69.46. It can't possibly be. Let's see what it does. 64.64, and what is that right there? I'm missing something here. It says 64.64. Then right here, though, it's saying 60. That doesn't make sense. So let's click on that guy. Oops. Okay, there we go. I can't tell. But anyway, there's hold on just a second. Hold on. Okay. So we're back. So I can't tell why that's 64.64, but why is it saying it's going down a, that doesn't make any sense to me at all. 60. I don't know what that is. But anyway, significant more decline from the VTSMX than it was the GMOM, that's for sure. I don't know what's going on there. That's interesting. So let's look at something else. Let's get out of here and look up VAMO. And I think that's momentum, value, and momentum. And I'm actually a pure believer in this. VAMO, value, and momentum, if I'm mistaken. So they're buying underpriced the securities, what they think, and they're riding the winners and selling the losers. And I literally just, again, don't know what it's done. Right now it's down for the day, 0.38. Don't care. Let's go to just, I think, what do we want? Chart. And let's see. P yield expense ratio, 52-week range. Let's see if it tells us performance. So we know the GMOM hasn't done anything in 5 years. I haven't held it for 5 years. What has this guy has averaged, hasn't done anything either, it looks like. Oh, there we go. Yeah, so it's done nothing. I mean, it's lost money. It's only been around since 2015. All right, so let's do chart and see what we're looking at here. 3 years total return, basically 1/8 of 1%. So don't spend that money anytime soon. All right, so value and momentum. Let's see what this guy. Ooh, look at that. Oh, that's again okay. VTSMX. All right, so yeah, we're down 2.76. Yeah, I to be honest, I just can't remember what. You get some. Why is that not 68.8? And that shows here it's not giving us. That's no way. That's 60. Okay, maybe. All right, 66.4. Okay, maybe it is. What is that for? What's the time frame here? Oh, 1 week. I don't want 1 week. I'm okay. Scratch all that. I want max. Can give us max here or what? There we go. All right, sweet. Oh, that's okay. So here you can see the VTSMX 68.85 and yeah. Oh, well, there we go. All right, sweet. Now it's giving it to us. Okay. I'm still not. So I'm confused. But anyway, so there are my holdings, my friends. That'd be something for you to look into. Why is it just, let's drive me up the wall. So let's go to Cambria, Google. We're going to go to Cambria Investments, and you can do your own research on this. Investments. Should you buy it? No. Should you not buy it? No. You should do whatever you want. But I'm telling you, man, if you're interested in investment commentary, I think this is a place to be. With my man Ned Faber, Investing Insight, just tons of stuff. Look at this, tons of stuff here. You can get this free book. Let me get my mug out of the way, which I think is right here, right? Global Asset Allocation. Get that sucker. I'm telling you, it's fantastic. Meb is a guy, and I think I'm older than Meb. In fact, I know I'm older than Meb. But Mem was a guy who kind of with Nassim Nicholas Taleb, who made me realize that I always knew this, but in terms of I couldn't explain it in my own brain as well as until I listened to a Meb, and I think I read this too, where he talks about it's all good for market history except for when it went south because the communists took over because World War II or whatever. And I said, man, that's so right, and that's like the black swan that Nassim talks about. Nicholas Taleb, where he says, "Look, yeah, historical data is great, but the facts are, if historical data was, if you're not including the black swans that could be, you could be, in a world of hurt when it comes to your investments." And I tell you, man, I thought that's great. So I'm a big fan of Meb stuff. Tons of commentary here, white papers. Listen to his podcast, watch his videos, read his articles. Will it make any money? Probably. In the long run, absolutely. Well, when? I don't know. How long will it take? I don't know. But you can download all his books for free. I mean, that's what I'm talking about. And investment period, I'm a big fan. So I'm a believer. I still believe in a low cost diversified mutual fund through Vanguard. Maybe the target retirement fund isn't the best. I frankly just don't care. It will probably get me in the top 20% of my peers over 5 to 10, 15, 20 years. I'm fine with that. It's aggressive enough. It's got stocks. I won't, once it breaks probably more than 15% bonds, I'll switch it out to make it all stocks again. But for the time being, I'm comfortable with it. So anyway, go in here, read some of Meb's stuff here. There's just tons of stuff on here. Global Asset Allocation. Get the book for free. How to was the one shareholder yield, a better approach to dividend investing. I'm a huge fan of that. And about Cambria, where are their investments? ETFs right here. And click on this guy, and you get a list of all the Cambria stuff. It's good. I'm a big fan. Cambria Global Value, Cambria, just tons of stuff, man. Should you invest it on this? No. Do your own research. All right, my friends, don't forget to subscribe, and we'll see you next time. That's my investments for 2019. I'll let you know when I change, which it won't happen. I'm just telling you, it won't, because keep it simple, stupid is what you need to do at all times. All right, we'll see you guys.